Good morning, viewers. It's Thursday morning, April 24, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Investors are breathing a sigh of relief and putting the Sell America trade on pause. A rally in US stocks continued for a second day after the Trump administration addressed the two of the market's biggest concerns by softening its tone on both China and the Federal Reserve. US stocks leapt higher on Wednesday after President Donald Trump soothed fears the Federal Reserve could lose its autonomy with reassurances that he had no intentions of firing Fed Chair Jerome Powell. Trump also softened his tone on tariffs, hinting that eye popping duty levels on Chinese imports could ultimately be scaled back. The Trump administration is considering slashing steep tariffs on Chinese imports in a bid to de-escalate tensions with Beijing. The S&P 500 closed up nearly 1.7%, while the Dow Jones Industrial Average added more than 400 points, or about 1.1%. Nasdaq Composite led the gains, rising 2.5%. But stocks moved off bigger gains. The Nasdaq was at 1.4%, while the Dow Jones had added roughly 1,100 points after Treasury Secretary Scott Bessent told reporters that there has been no unilateral offer from the president to de-escalate Trump's trade battle with China. Still, optimism largely prevailed through Wall Street as Bessent at a finance industry conference on Wednesday said America first does not mean America alone, and also on Trump's generally softer tone on the twin developments. Trump said Tuesday he expected China tariffs to come down substantially hours after Bessent called them unsustainable. China, for its part, signaled that the door to trade talks was open, but not under duress. Meanwhile, Trump told reporters from the Oval Office on Tuesday that he never did intend to remove Powell, though he reiterated his desire for the Fed chair to reduce interest rates. The comments offered relief to investors who had feared a growing rift between the two could add to uncertainty in a market already shaken by tariffs. This eased Wall Street's fears over the central bank's independence. As recently as Monday, Trump had called Fed chair a major loser, causing stocks to tank. Last week, the president said Powell's termination couldn't come fast enough. Meantime, investors eyed global business surveys for insight into how Trump's efforts to rewrite the rules of trade are affecting the real economy. On the economic front, S&P Global's advanced flash April Purchasing Managers Index showed business activity losing momentum and companies charging higher prices for goods and services amid mounting uncertainties. Purchasing Managers Indexes showed Eurozone activity weaken in April but picked up in Japan and India. US data showed business expectations about the year ahead falling to some of the lowest levels registered post pandemic. Immediately following his inauguration, Trump had promised to supercharge the economy. First quarter earnings season has hit full stride, with 110 of the companies in the S&P 500 having reported. Of those, 75% have beaten Wall Street estimates. Among the 11 major sectors of the S&P 500, tech and consumer discretionary notched the biggest percentage gains, while consumer staples and energy lagged. Tesla shares gained 5.3%, even though earnings missed expectations. Chief Executive Elon Musk said he would dial back his work with the Trump administration to devote more time to running his companies. Even so, the electric car maker posted a 71% plunge in quarterly net profit. Nvidia, Meta, and Amazon also rose about 4% on Wednesday. Boeing reported a smaller than expected quarterly loss as the plane maker produced and delivered more aircraft. Its shares surged 6.1%. General Dynamics posted a 27% increase in first quarter profit on sustained defense demand, but the company's business jet orders fell from the previous quarter. Its stock dropped 3.3%. In other Wednesday's trading, gold retreated, trading below $3,300 a troy ounce. It had hit a record high on Tuesday above $3,500. Long term Treasury yields climbed off the lows on the day, with 10-year yields settling at 4.385%. The dollar strengthened modestly. Bitcoin ran up further, trading above 94,000 before retracing slightly. My take: tariffs and Powell off the boil? Treasury Secretary Scott Bessent said high tariffs between the US and China were unsustainable, and Trump signaled he was open to easing trade tensions between the world's two largest economies. So far, so good. President Trump also said he had no intention of firing Jerome Powell. That being the idea, this is even better. Such strong, open twin developments out of Washington. So, those are clearly both positives that the market was hoping to get, and it got them. Obviously, the twin threats had put pressure on bonds and the dollar and equities and had kind of accelerated the rotation out of American assets. To find an economist who thinks that this level of tariffs and trade protectionism is a good idea is going to be hard pressed. Almost most view the central bank chief as a stabilizing force in the market. Fed independence is one of the unspoken bastions of the developed market system. In the past two sessions, money came running back into equities, bonds, and the currency following the pause from Washington. Now, is this just a temporary reprieve or a permanent solution? It still begets the question: are tariffs and Powell off the boil? And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.